welcome to Markets and Narrative with Xlence, where we try to decode the markets behind the madness. We break down stories to see the price action so you can trade smarter. Together with us, as always, we have Andreas Haralambous, the market research analyst, and myself, Chris Karalis, trading specialist.
Welcome everybody to another episode of our series. Again, another episode, we're going to try to decode what's going on in the markets and hopefully attempt to make sense.
And if you're not prepared these days, it's either you're going to make it or you're actually going to lose a lot of money. For instance, we have the ongoing US government shutdown. We have a global turmoil. We have the $37 trillion reset for the US economy. And on top of it, we have non-stop months of profits. But we just witnessed the worst day of a stock market since April and the largest one-day sell-off, the one-day liquidation of the cryptocurrencies in all history. And that's all because of one single word, China.
Mm-hmm. So yes, we have seen a lot of turmoil over the past few days now. The volatility index, also known as the VIX, has spiked on commentary from President Trump towards China in regards to their unfair practices and unfair kind of, let's just say, restrictions, more specifically on rare earths. That prompted the president to go in a taper tantrum, someone might say, and cause a lot of volatility and panic in the market. We have seen a sharp sell-off, as you mentioned, of US equities and cryptos as well. Again, primarily because traders are now fearing that the Liberation Day event is going to play out once again due to the fact of increased tariff threats.
So far, we had 2 Liberation Days. Donald Trump gave the last 90 days, second time for China, so until they reach an agreement on the tariffs. And is expected to be released on November 1st.
So yes, we have seen the relationship between the two nations somewhat becoming stable after they have announced some 90-day truce back in, when was it? May. It has ended in August, and then it was reignited or restarted, if you would like, or pushed forward by another 3 months. This is going to end on November 9th, if I'm not mistaken. So a month or a few weeks towards November, and we start to see tensions rise again, causing mayhem, at least temporarily, in the US stock markets, as again, traders are fearing that they're going to be, again, imminent kind of threats or retaliations between the two nations. And it's going to make trade much more difficult.
We've seen China actually being the first one trying to tighten the exports of rare earths. And why people care, why rare earths are so important. Well, actually, they're very essential for the production of technology equipment such as electric cars, the lithium batteries, LED TVs, cameras, or even used as semiconductors for artificial intelligence.
Semiconductors, ships, on airplane components, you use this kind of 17 rare earth metals that, in a sense, they have properties that are going to be useful for this AI revolution, but also besides the AI revolution is essential for this kind of green energy transition. So we're talking about 17 metals. Some are indeed rare and others are not so rare, that have magnetic and electrical conductivity kind of properties. And yes, these kind of export controls put by China are aiming, in a sense, to shore up their dominance, even though they are actually the world's largest refiner or these kind of metals, also the richest nation that has these kind of metals. So they are, in a sense, holding these kind of rare earth metals as hostage, and they're not allowing their competitors, and from some may say rightfully so, from getting their hands on them that easily. Okay?
And
so it's a bargaining chip, if you like,
yes,
from the Chinese Communist Party in order to achieve its goals and not allow other economies, mainly its rival, the United States from getting their hands on this kind of material so easily.
And we've seen, once China announced it, we've seen Donald Trump coming out threatening with 100% tariffs. And of course, everything crashed, as we mentioned earlier. But on a Sunday,
And also on Friday,
yes,
Friday afternoon.
And then Sunday and Monday, he tried to calm down the markets. Actually, he tweeted that don't worry about China, everything will be fine. And we've seen a renewed optimism coming back in the markets as well.
Yeah, so Friday we have seen this kind of steep sell-off, which in a sense you have seen the gains of the prior 2 months, if I'm not mistaken. So September, October gains were wiped out within half a trading session, and due to the fact that we have seen this kind of escalation from Donald Trump. On Sunday, we have seen him attempting to calm the market, say, again, as you just mentioned, don't worry about China and all that kind of stuff. As you would like to say, the taco trade played once again. And Monday, in the pre-market session, we have seen markets rebounding, or in a sense, not taking the bait and returning to the market, buying the dip and lifting all three US stock market indices near their all-time highs where they have fallen off from. But yeah, tensions are still there. If I'm not mistaken, today in pre-market session, we see all three major indices trending in the reds. Again, because this kind of tension and the volatility is spiked up for the time being. We'll see.
Well, the stock markets and the stock indices, we expect to be volatile, even though they have reached all-time highs, breaking all-time highs all the time. At the same time, China is in focus now, especially for all traders and investors, due to all the economic data and the releases coming out this and next week.
Mm-hmm. Yep. So China is back in the limelight, if you would like to say this. Not that it wasn't in the spot per month. Those who have fallen asleep watching China, they're going to wake up seeing progressing kind of rapidly and fast. So as a matter of economic news releases yesterday, we have seen the latest trade data coming from China. So for the month of September, if I'm not mistaken, exporting activity continues to rampantly grow month after month. If I'm not mistaken, this is the 7th consecutive month of growth in regards to the exporting activity.
And much higher than expected.
Yeah, expectation was 4%. They ended up with something like 8%.
It was 6% expectation, and the actual was 8.3.
Okay, 4.4% was the prior reading, if I'm not mistaken.
Yes, correct.
So yes, we continue to see Chinese export growth mechanism beating estimates and rising month after month, which practically signals to the market that, you know what, we don't care about the US tariffs. We as China are going full throttle with our exports. We do find partners to buy our stuff in the nearby region. So the nation with the largest imports from China in September, if I'm not mistaken, was the region of the Asian countries, so nearby nations. Africa did pretty well as well, continues to
developing countries.
Yeah, developing countries in general. Japan was on the lower end. Europe was the surprising aspect of things, where they have extended, if you would like, purchases from China despite the pressure from the United States to cut off ties with Russia, in a sense, because China is collaborating with Russia. So the United States is forcing the EU to stop buying stuff from China. European countries are not actually doing that. They continue to buy stuff from China en masse in fears of tariffs. So again, this picture drawn by the latest trade balance from China signals that they are able to circumvent the tariffs, and they continue to sell their stuff into nations that do actually need them for their day-to-day operations. And they remain competitive, but also they hold the superiority position, if you like, against their major rival, which is the United States. And they continue to grow. Something else to finish on saying is that the United States imports, so in a sense, stuff coming from China into the United States have plummeted by 25, 27% for yet another month. So this kind of trend is ongoing. And yes, we continue to see China outperforming kind of impressively.
And more data coming up. We have the CPI, we have the PPI, and next week we have the loan prime from a
Great decision, yes, from PBOC.
Public Bank of China. We have the fixed asset investment. We have the GDP coming out from China. What can we say about the overall economy?
So yeah, let's do a quick breakdown of what's going on with China. So we mentioned exports, okay? Those are good for the Chinese economy. They're maintaining their superiority, but on the domestic level, we have a completely different picture.
Exactly.
Okay, so even though, I have to note this, even though we have seen the latest report, the trade data, as you just mentioned, where I have outlined what has happened with exports, imports, on the other hand, have also grew in the month of September, something that we did not see in the prior months. So again, this is in a sense an indication that domestic demand is kind of reigniting, okay? But it's a standalone reading, okay, for the time being. Again, giving a broad overview of what's going on with the Chinese economy, they continue to have problems with consumer spending. So their consumers are not willy-nilly going out there and purchase stuff mindlessly like you continue to see in the United States. So the consumer spending trends are beaten down. So
we see a negative inflation pressure.
So yeah, which causes inflationary pressures to stop being inflationary and fall into the territory of being deflationary in nature. So instead of prices rising month after month due to increased demand, the lack of demand is pushing prices lower in order to become much more competitive, even though consumers are not actually going out and spending en masse. Okay, so this is the problem of the Chinese economy. Consumer spending trends are beaten down, and that's why we may see the PBOC in when is it, next Monday in the early Asian session, possibly pondering of whether to lower interest rates further in order to allow much more the ability for more to people to, in a sense, get loans and finance their operations and their needs, and hopefully start spending again. Okay, or maybe we're going to get another big stimulus package, which is going to address this kind of deficiency or this kind of imbalance. So again, exporting mechanism is firing on all cylinders, which is very good for the growth aspect of things in the Chinese economy, but something that may drag on or may cap the gains for the GDP projections in the near few quarters, maybe the consumer demand aspect of things. So yeah, GDP reading is also going to be superbly important. But nevertheless, we continue to see the Chinese economy managing to set a 5% target for the entire year and actually managing to hit it, okay? And we have seen the confirmation by the IMF as well.
What I would say, never underestimate China. I believe China is now in a new world where they overpassed and they are outperforming, especially in technology sector, Europe and maybe the US as well. We've seen the AI and data centers actually started building in China as well. So definitely it's a new power, and maybe in the next few years we might see a change in the world order.
Yeah, of course. So yes, China has moved onwards from the contender, and it's actually a good or challenging kind of rival to the United States. Maybe it's going to surpass the United States in regards to superiority in the next few years, as you just mentioned, at least on the economic front. They are doing pretty well on the technological front, as you just mentioned. And maybe we're going to have a new superpower, or at least someone challenging the superiority of the United States within this next decade. I think it's going to be much more shorter than that. So yeah, it's going to be fun.
President Trump is a person who knows about the deals and definitely doesn't want to go against China and wants to make the best deal possible, especially with the tariffs. Expected to meet up by end of this month or maybe beginning of November. Donald Trump is going to be at the APEC meeting and then maybe in North Korea.
South Korea. Yeah.
South Korea.
So yes, Donald Trump is inherently aware of the problem that is called China. So he is actually recognizing China as a threat, as a rival, as someone that is indirectly attempting to take the hegemony and the first seat or the podium, if you like, in global stage politics and on the economic front as well. So he takes China seriously, and that's why he and his team are putting the necessary, if you would like, measures and tactics in place in order to reinstate the United States as the global power and stay ahead, or at least stay competitive with China, because he's increasingly aware that if he falls behind, and the United States is actually falling behind, China might step ahead and the United States may not be able to catch it, if you will, like, from here onwards. So yes, that's why we continue to see this kind of aggressive stance towards China. It's all a geopolitical kind of theater of play. Yeah.
Well, I think that would be for today. Thanks for listening. Definitely, we've seen a very huge volatility in the markets. We've seen VIX, which measures the volatility and the uncertainty in the markets, being at all-time highs as well. Gold also at all-time highs. Every time we have this podcast, gold is breaking new highs.
Yeah. Silver as well, other precious metals as well, equities, all-time highs. So yeah, we live in a crazy, crazy world.
And definitely trade with proper risk management and make sure you study your charts and you know your fundamentals as well.
Mm-hmm. Thank you for watching, and we'll be watching closely the developments between the United States and China, between President Trump, President Xi in the upcoming weeks. Hopefully, they're going to manage to collaborate and ease these kind of tensions. We'll see. Take care. Bye-bye.
Click and subscribe. Bye, guys.